This is Colin Cattell with Palisade Radio. Today on the show, we're joined by a new guest. Her name is Gwen Preston, and she is the founder of the Resource Maven. That can be found at resourcemaven.ca. Gwen, welcome to the show.
Thanks very much for having me.
Gwen, as the name Maven suggests, you're an expert in the resource space. You have years of experience as a mining journalist. What can you tell us about your past life prior to founding Resource Maven?
Well, yeah, you talked about it there. I worked with the Northern Miner, which is, as many people would know, sort of the preeminent mining newspaper in the world. And that was an incredible learning platform. As a senior writer for that paper, your job is to spend your days following all of the news that's going on in the global exploration and development world, and to ask questions about any story that interests you until you understand it. And then the next level of learning comes from the fact that I got to go on site visits. So I spent much of my time traveling and visiting projects, and that's just an incredible opportunity. You get to spend real time, days with management teams and with geologists on site, getting your hands dirty, understanding the importance of infrastructure and location and social license and all of those things in projects all over the world of all different geologic types. So an incredible learning platform. I spent 5 years with the Northern Miner, and in the middle of that time, I actually left for 2 years, and I worked with Marin Katuza at Casey Research. And so that gave me another sort of area of knowledge, a lot more exposure to capital markets, to listening in on or being near Marin as he operated his investments and his funds. I basically was ghostwriter for his newsletters. So then also understanding the newsletter sector from a corporation that's very good at it. So yeah, those two things together gave me a really solid knowledge background, and also gave me a large network of people that I can now rely on to give me information, keep me abreast of what's happening, and to go to if I have any questions that I don't have the knowledge to answer.
Recently, you were interviewed by the Gold Report, where you declared that the bottom on November 5th was indeed the final bottom for gold and gold equities. Is this a conclusion you've reached through technical analysis or a fundamental approach? What makes you so sure on this?
There are lots of approaches to this kind of question. Like you say, some people are very oriented towards technical analysis. Some people are more generalist in their approach. I think of my approach as that combination of art and science. I certainly spend a lot of time looking at charts and talking to technical analysts and understanding that aspect of it. And then I also do a lot of taking a step back and just looking at the big picture. And my assessment that gold bottomed on November 5th really comes out of both of those. I mean, if you want to look at gold, there's three main reasons that support the idea that it's upwards from here. In fits and starts, but upwards from here. The first is straight fundamental supply and demand. Demand for gold is very strong. The little step back that we've had in the gold price in the last little bit is largely to do with the Chinese New Year, not completely, but China is really where a lot of our gold demand is coming from. They take a break from buying gold when they're celebrating the New Year, along with some other things that happen. But demand is very strong in the gold sector. Supply, on the other hand, is starting to slide. Producers let costs climb out of control during gold's bull market, and as we know, had to spend the last few years cutting back, so new mines and expansions were deferred and canceled. Output from higher cost operations was curtailed. That really limited gold output in the short term. And in the longer term, I think we are at peak gold, which means we'll never again produce as much gold as we're producing right now. So the fundamental supply-demand question is bullish. Secondly, the average sort of global all-in sustaining cost to produce an ounce of gold is somewhere, it depends whose numbers you use, but it's somewhere in the $1,100 to $1,200 range. And because demand is very real, that means that prices simply cannot go much below that level. If they do, then it will come back up again, because you just can't produce gold that cheaply anymore, or at least not in the volumes that it needs to be produced to support Asian demand. So the market has to be willing to pay at least that much for gold. And then the third reason is the intangible side of gold. We are fairly awash right now globally in currency concerns, debt worries, geopolitical risk. And those are very supportive of gold. Even deflation is not necessarily a bad thing for gold. The price of gold has climbed during periods of deflation before. So I think concerns about the global economy, levels of personal and national debt, combined with, a war to drive currencies as low as possible for nations to gain competitive advantage, that's the third reason that bodes well for gold. So it's all of these things together that solidified that stance for me.
I think you make some strong points there. And one thing I've noticed over the past few weeks, some of the earnings that are coming out, while not great, are starting to improve for the producers. How do you see a bull market playing out in the sector? Is it going to be a long and slow rise? Are you looking for something sharp like when we came out of 2008?
I wish we could be looking at a 2009 right now. Unfortunately, I don't think we are. I think that this year, we saw our lift in January. We've lost a fair chunk of that lift here in February. I do expect gold to be higher by the end of the year, in the 1,300 range, but that's not dramatically different from where we are now. So I think what gold really needs to do, and I think will do this year, is show its sticking power. So I think, we can have some bumps up and some slides back down, but it needs to show that it's done declining and that support is there to keep it above that bottom that it touched. And during that time, then you start to get the added catalysts that show the generalist investors who have largely abandoned the gold space because returns were not what they should have been during gold's bull run. As gold can slowly start to creep up, some major contrarian investors come back in, deals start getting done, that will start to move interest back into the gold sector as a whole. So that's equities and ETFs and gold, physical gold as well. And so it takes time for that to establish. So I think this 2015 is the year in which that establishes, and I have higher hopes for 2016 for gold and a few other commodities, but definitely for gold.
I think you'd be in the camp of people that would say it's very important to pick the right companies, especially coming out of a bottom. Maybe all of the companies will move up, but some of them will certainly perform better. What sectors right now in the commodity space are you looking at? Are you specific to precious metals? And if so, are you looking at the juniors or the producers?
Absolutely, yeah. So within gold, gold is certainly my top focus for this year, especially in this moment. I think it has the strongest reason to rise the soonest. Within the gold sector, I think there's really interesting opportunities across the board. That being said, exploration juniors are the last to respond to a rising commodity price. So as much as I would love to say that I'm betting on exploration juniors, I have one or two in my portfolio that are sort of the hope to hit it out of the park, really strong exploration plays. But in terms of near-term gains, what I'm primarily suggesting to investors is to focus on those companies that have the best potential to be taken out. So if you actually want to make money on gold equities this year, as opposed to just positioning yourself in strong gold companies to hold on to for the longer term, for the several year time frame, which is another opportunity right now. But if you want to make money on gold this year, the best opportunity to do that is to try and pick the takeout candidates. And there's the three key characteristics that that any takeout candidate needs to offer is, first of all, they have to have a project that has economic ounces. And that can come in many different forms. In our bull market, a couple of years ago, there was this real focus on open pit deposits because we were all about size. Well, it doesn't matter now whether you're talking about an open pit deposit, whether you're talking about an underground deposit. What matters is that the ounces are economic, so the margins are good. That's the first. The second is that the project has to be near to development, and it has to offer straightforward engineering. We've seen some in the last 5, 6, 7 years. We definitely saw some projects that sit atop of fantastic large deposits, but because the engineering is too difficult, the project just isn't going to happen. Not in this market, not in any market that's anytime soon. So it needs to be fairly close to development, including having addressed or created good relations on the socio-political level, and it needs to have straightforward engineering. And the third is jurisdiction. We have seen a lot of examples of majors that had to write off huge acquisitions because the country didn't work out, or because the local relations were so terrible. And that is not that, when the majors got burned like that, understandably, they're not willing to do that again. That's the reason why, Ontario and Quebec are such prime jurisdictions right now. Some of the big takeouts that we've seen, takeouts that we've seen lately have been in those sorts of stable jurisdictions where, you know what your fiscal structure is, that what the permitting process looks like. There's already operating mines in the area, and you can rely on the fact that the jurisdiction shouldn't provide a problem. So that's what you need: economic ounces, near development with straightforward engineering, and a supportive jurisdiction.
Gwen, have you spent much time analyzing the gold to silver ratio, and has it led you to any conclusion on which metal you see outperforming?
I haven't spent a lot of time looking at it. That being said, I still believe in gold over silver for this year. I think gold usually leads the rebound for the markets in general, for all of the commodities, when we're looking in the broad, when we're taking a broad look at resource cycles. And there is so much uncertainty around metals and mining and exploration in general. Those drag on silver. Despite silver having, the industrial demand that you would think would make it a more fundamental, would create more fundamental arguments, because of the context of currency wars and geopolitical issues that are as important for gold as the supply-demand question. I think gold will continue to outperform silver this year. Going forward, when we get a proper bull market for the sector in general, I think silver will definitely play a catch-up game.
On that note, let's start to wrap up here. How can investors get your full analysis? I know the website's resourcemaven.ca. What are the different products that you're offering?
I offer 2 streams of content. So the first is free. Anybody can go to my website and sign up for my free commentaries. So 2 or 3 times a week, I publish an article on what I think is interesting or important in the sector. And the second stream of content is the subscription side of it. So subscribers then get a second newsletter or set of newsletters that outlines what I am buying and selling. So those are my recommendations, and I recommend what I buy. The subscriber portfolio is my portfolio. I'm very risk aware, so I certainly talk about selling as much as I talk about buying, because buying is only half the game. I believe very much in taking money off the table once you've had a gain of a certain amount so that you can lower your cost base. And I really believe that right now is an incredible opportunity to position for what will be a fantastic bull run over the next few years. And this year, I think we're going to have some really interesting opportunities for short-term, for some short-term gains and for some really solid positioning for some longer-term opportunities.
Gwen, thanks so much for coming on the show. Some great analysis. I can tell you take a very objective and level-headed approach to the sector. We'll have to get you back here soon.
I appreciate that very much, Colin. Thanks for having me.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen, or are you too stupid?